The MBA Retirement Savings Plan is a retirement income vehicle. The plan allows an NALC member and their spouse to put funds away to supplement their retirement. The policy owner may choose one of three options offered by the Retirement Savings Plan: a traditional individual retirement account, or IRA, a Roth IRA, or a non-qualified deferred annuity. Depending on the plan chosen, the growth or interest in these accounts is either tax-deferred or tax-free. In a traditional IRA, the contributions made each year can be deducted from your federal income taxes. Any additional earnings or interest accumulate tax-deferred until the time of withdrawal. The distribution age for a traditional IRA is 59.5 or older. At the time the distribution, the earnings and principal are taxed as ordinary income. The IRS requires that a required minimum distribution be made each year after the insured has reached the age of 70.5. The Internal Revenue Service sets an annual contribution limit each year. Contributions to a Roth IRA are not tax deductible, but earnings accumulate tax-free. At the time of withdrawal, earnings are free from taxes if the policy owner has held the Roth IRA for a minimum of 5 years and is at least 59.5 years old. As with the traditional IRA, the IRS sets an annual contribution limit. There are no age, contribution, or income limits for eligibility on the non-qualified deferred annuity plan. In addition, there is no requirement to begin receiving mandatory distributions at a certain age. Earnings accumulate tax-deferred until the time of withdrawal, at which time distributions are then taxed only on the interest you have earned while your policy has been in force. The Retirement Savings Plan premium payments are flexible. NALC members and/or spouse can choose the amount and the frequency of payments. Premiums may be paid through the convenience of biweekly payroll deductions or directly to the MBA annually, monthly, or in lump sum deposits. The frequency and amount of premium payments can be changed at any time by notifying the MBA Executive Office. After the initial payment into your plan, no additional annuity payments are required to keep the policy in force. The plan can be opened with a minimum payment of $15. Interest rates are determined each year by the Board of Trustees. During the first 6 years of an MBA Retirement Savings Plan policy, there is a surrender charge for funds that are withdrawn from the policy. The policy owner may request a portion of the cash value in writing. This is called a partial cash surrender. One partial cash surrender is allowed per policy year. The proceeds of a retirement savings plan are payable under one of the following options: full cash refund, life annuity with period certain, or joint life annuity. The amount of each monthly payment is determined by the age of the covered insured on the date the option takes effect and the amount of funds in the policy. Full cash refund option. Monthly payments will be made as long as the payee is alive. At the death of the payee, the MBA will pay the balance of the account to the payee's beneficiary. Life annuity. Monthly payments will be made as long as the payee is alive. No further benefits will be payable after the payee's death. Life annuity with 10 or 20-year period certain. Monthly payments will be made for a specified period of 10 or 20 years and will continue after the expiration of those years as long as the payee is alive. If the payee dies during the 10 or 20-year period, payments will be continued to the end of that period to the beneficiary. Joint life annuity: monthly payments will be made during the joint lifetimes of two payees, and after the death of one payee during the lifetime of the surviving payee. In the event of the death of the insured or policy owner of a retirement savings plan policy, before an annuity option has been chosen, the designated beneficiary will receive the proceeds from the policy. The policy owner may change the beneficiary designation while the insured is alive. At least once each year, the MBA will send the policy owner a report which shows the beginning and ending date of the report period, the annuity fund and cash surrender values at the beginning and the end of the reporting period, the premium payments made, the amount of any partial cash surrenders, and interest credited during the reporting period, the current death benefit, and any other information required by the state in which the policy is delivered.